I mean, we should be talking about robo-taxis, right? We heard that full self-driving version 12, their latest version of autonomous driving software, is going to roll out to more customers in North America soon. I think that shows confidence in their autonomous capability. And as you know, we think that's a multi-trillion-dollar opportunity. We also heard that Optimus might ship next year. I mean, general purpose robots for manufacturing alone, we think could be a $10 trillion market as a whole. So we're really excited for those AI opportunities. This is one of the greatest AI stories of our time.
People should be buying this dip. I think that people should look at owning Tesla as owning the most efficient car company of the next decade. I think there could be a world in our future where F-150 Lightnings are built with Tesla batteries or on Tesla chassis. I think there could be a future where Tesla is the mainline provider of all EV technology to many others, regardless of what the badge on the hood is. And when you look at Tesla, if you are to look at it as a multiple of revenue, if you are to judge them that way, you're not going to like what you see. But if you look at their growth, if you look at how fast they're able to make cars, and you look at how cheaply they're able to produce vehicles, which means they can sell them cheaper, which means they can still make a profit to a larger demographic of our population. I think all of those things are good for Tesla to continue to be a cornerstone player in this EV world that we're all leading ourselves into.
In the ever-evolving landscape of the electric vehicle industry, Tesla stands out as a titan whose movements are closely watched by investors and enthusiasts alike. However, recently, Tesla's stock has experienced a noticeable dip following its quarterly earnings report, triggering a wave of analysis and speculation. In this deep dive, we examine the several reasons behind Tesla's latest market performance, the bull and bear case for accumulation, and what future price movements might look like. We know that as an investor, you may be distracted by the recent noise in the market. And so, in the course of this video, we'll also uncover some aspects of Tesla's strategy that might have escaped your notice. So, buckle up as we navigate the intricate world of Tesla's market dynamics, offering insights that every Tesla holder and prospective investor should watch closely. Let's dive in.
All right, let's get to one of our biggest trending tickers of the day, and that is Tesla. Shares selling off ahead of the open on worries about lackluster demand and also the weak results that we got out after the bell yesterday. Well, on the earnings call last night, CEO Elon Musk blaming higher rates for those sluggish sales. Let's take a listen.
It's not that people don't want it. We have tons of we have lots of people who want to buy our car but simply cannot afford it. As interest rates drop and that monthly payment drops, then they're able to afford it and they buy the car. It's pretty straightforward.
So we're looking at shares under pressure here ahead of the open. Year to date, this is a stock that's already been under pressure, off just about 16%. So what's ahead? Let's talk about it. We've got two analysts, I should say, to break all this down for you. We want to bring in Tasha Keeney, ARK Invest Director of Investment Analysis and Institutional Strategies. We've also got Dan Ives, Wedbush Managing Director, also Senior Equity Research Analyst. Great to have both of you. Dan, let me start with you because your reaction, the note that you sent out here this morning, caught our attention in terms of some of the issues that you are raising on the heels of these results. And you were talking about the fact that you wrongly expected that adults were going to be in the room on the call. You took issue with some of the things that were said during the call. How has maybe what you've heard over the last 12 hours changed your short-term outlook here on Tesla?
Look, you need communication. What the margin guidance is ultimately going to be, how many more price cuts. And I think that's the frustration. At a time that investors need adults in the room, it felt more like preschool. And I think that was a conference call. You're going to see pressure on the stock. The long-term story doesn't change, and Tasha, I'm sure you'll agree. But in the near term, the bears win.
I'll put this question to both of you, Dan, just because you brought this up a moment ago and we mentioned this in the intro. Is it as simple as interest rates not being in Tesla's favor, or is there something else at play within the broader EV demand landscape? I'll go to you, Dan, first, and then I'll get your thoughts, Tasha.
Look, demand overall has actually been pretty strong relative to, if you think about how bad it could have been, 35% plus growth, call it 18, 20% this year for 24. The reason the stock's down, it's because of margins. And I think 80% of the reason the stock's down is communication, 20% results.
Tasha, want to get your thoughts on that as well. And I'll layer on perhaps this additive, a new model. Is that really going to spur demand the way that some investors were hoping for or might have anticipated?
Yeah, well, I think, Dan said it, right? I think that the focus should be on the long term here. And a lot of investors currently right now are focused on the short term. Hey, look, Tesla's not immune to changes in interest rates, right? But when you look at the auto industry as a whole, they are, one of the only electric vehicle manufacturers that has this profitability. And we heard on the call that they're able to reduce costs at really an unprecedented rate. One analyst thinks it's over 10% a year. And they said they see further opportunity for cost reduction. So, they've cemented their lead in electric vehicles. I think if you want to talk about the next year or so, we should be talking about robo-taxis, right? We heard that full self-driving version 12, their latest version of autonomous driving software, is going to roll out to more customers in North America soon. I think that shows confidence in their autonomous capability. And as you know, we think that's a multi-trillion-dollar opportunity. We also heard that Optimus might ship next year. General purpose robots for manufacturing alone, we think could be a $10 trillion market as a whole. So we're really excited for those AI opportunities. This is one of the greatest AI stories of our time.
Tesla's stock trajectory in recent times has been nothing short of a roller coaster, marked by significant fluctuations that have caught the attention of the market. For the record, this is the third consecutive quarter where Tesla's stock has taken a hit post-earnings announcement. And despite achieving record-breaking delivery numbers, Tesla's performance fell short of Wall Street's lofty expectations in critical areas. Could this be a sign of trouble? Or is this one of those challenges that would eventually pass? Let's find out. Hello, everyone, and welcome back to Tesla Tomorrow. Tesla stock stumbled primarily due to a miss of 4.1% in earnings per share and a 2.32% shortfall in revenue. We know that for any company, failing to meet Wall Street's forecasts can spell trouble, but for Tesla, the impact is magnified. This is largely because Tesla's stock price is heavily intertwined with growth and optimism. And failure to meet expectations sends ripples of uncertainty, prompting investors to reassess their positions. However, the crux of the concern lies beyond just these numbers. It's the message these figures send about Tesla's medium-term growth prospects that has the market on edge. The automaker's portrayal of its next growth phase as distant, expensive, and uncertain has dampened the usual bullish sentiment. And this shift in narrative is significant, considering that Tesla's sales volume surged by 38% in 2023 and yet fell short of its targeted 50% growth rate. Also, this change in growth dynamics has understandably alarmed analysts and investors alike. So what is the way forward for these investors? Is it time to give up on Tesla and look out for other investment opportunities? Well, let's find out. But before we do, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. Tesla's growth story has always been a linchpin in its valuation, and any deviation from this narrative is bound to cause a stir. So what we're witnessing could be said to be a recalibration of expectations, as the market tries to adapt to Tesla's transition from rapid growth to a more tempered, realistic outlook. What we're trying to point out is that Tesla's recent market performance reflects a broader sentiment shift. And this is because investors who are accustomed to Tesla's high-flying growth narrative are now forced to navigate through a phase of recalibrated expectations and heightened uncertainty.
Tesla, a massive disappointment for the market this week. Shares, they got hammered after the company reported weak results and warned of notably lower volume growth. The sell-off, it comes following a lot of hype surrounding Tesla's AI ambitions. Valuing the name as a tech company, and CEO Elon Musk was asked about Tesla's AI efforts on the company's earnings call this week. Here's what he had to say.
Think of Dojo as a long shot. It's a long shot worth taking, because the payoff is potentially very high, but it's not something that is a high probability.
We've got an expert panel here to break down Tesla's results on three fronts: AI ambitions, EV demand, and whether or not Tesla is a buy for your portfolio. We've got Greg Migliore, who is the Autoblog editor-in-chief, Will McDonough, Cornerstone Capital Chairman and CEO, and Daniel Kolar, who is the Intralink Head of Automotive and Mobility Practice. Great to have all of you here with us this morning. Greg, I want to begin with you. You know, we've been talking Tesla for a while now, and we're trying to wrap our heads around this narrative that Tesla is continuing to put into the market right now, but not just the market of investors, but those of potential buyers. What most notably on the demand front should everyone be remembering now that kind of sets the tone for the rest of this year?
Hey, good morning, Brad. Good morning, Shauna. Tesla's in I think, an interesting position right now. The EV market is likely going to rise, but perhaps not as aggressively as we had originally thought. So Tesla is still well positioned to capitalize on that. But as you can see by the earnings call, they're not immune to the many challenges that automakers face, that traditional automakers face. They've seen pressure on margins. There's always going to be demand for Teslas, but what we're seeing now is many of their products are actually starting to get dated. They need to do refreshes. So in some ways, some of the shine has come off Tesla, perhaps from maybe 2-3 years ago, 4 years ago. They were truly a disruptor. Now I think they're very, sort of a standard car company. We saw that in the earnings call this week.
You see, sometimes investors want to believe that just maybe Tesla has a secret plan that they're not talking about. Maybe all this is just part of the bigger plan, and they may be right. The truth is that the focal point of Tesla's current challenges revolves around its medium-term growth trajectory. The company, in a stark deviation from its usual growth-centric narrative, has painted a picture of a challenging journey ahead. And this shift has significant implications for investors and the broader market's perception of Tesla. These investors, therefore, face a dilemma. While some see this as a temporary phase and an opportunity for future gains, others fear a repeat of past struggles, recalling Tesla's challenges during the Model 3 ramp-up. This uncertainty has led to a divided sentiment, where investors need to create a balance between immediate concerns and long-term prospects in order to make any investment decision. So what if this is all part of the Tesla growth story? What if investors are still headed to the season of better and bigger ROIs?
And Tasha, you've been a long-term bull here on Tesla. But Dan, let's talk about what is going to happen here over the next 1 or 2 years, because 2024, it looks like from the commentary there, it's going to set up to be a very challenging year, or a challenging year, I should say, for Tesla. Is 2025, is that going to look much better?
Look, I mean, and I think, Tasha, we agree 100% from an AI perspective. That could be multiples of what the stock's worth today from an EV opportunity. But 2024, you need to hold the line on margin. You cannot continue to cut prices. I think if this is a trough period, next few quarters, then this is the low. But it comes down to the communication, because investors want to hear guidance to sort of navigate this period. When the plane's crashing in the near term, you're not focused on salted or unsalted pretzels.
You know, Tasha, when we think about what other auto manufacturers are doing as well right now, I mean, the scale has been there for years. Tesla has obviously been able to ramp up over these past few years, specifically in EVs. A lot of these other manufacturers have had to either pivot some of their ambitions or at least draw back, but they still have considerable scale that Tesla perhaps can't turn on the same way. You know, how are some of the other manufacturers, Ford, Stellantis, GM, how's what they're doing perhaps one of the larger kind of clouds that continues to loom over Tesla and the larger demand environment as well?
Well, Brad, you said it. Those traditional auto manufacturers are actually pulling back their electrical vehicle plans. And it's, again, because they don't have, they don't have the lead that Tesla has. They don't have the cost structure that Tesla has. So yes, they have scale, but not in electric vehicles, right? Some of the Chinese automakers have scale in electric vehicles. But when you look at North America, Tesla's been the lead for a long time. And by the way, it's not just about cars, right? It's about AI. It's about compute. And Tesla is years ahead of the competition there. I mean, what they're building out in terms of AI compute is going to rival many tech companies, let alone automakers. Automakers aren't even close. And you cannot talk about Tesla without talking about this robotics opportunity. And so to give you an example, right, Tesla has millions of cars on the road. They're able to access data from over 2 million miles of full self-driving behavior from customers per day. No other automaker can pull that information off of their customer cars. I mean, this is unprecedented, right? So when you think about solving for autonomy, which is the future of the auto market, and if you're not there, I don't even know if you can survive the next 5 years, 10 years. So I think that's where Tesla has this lead. And I think that we see videos of these vehicles where people don't have to intervene and it's full drives, right? So it's already possible in specific scenarios, you know, California locations. I think that they could launch a ride-hail robotaxi service a lot sooner than people expect. And then, you know, the margin fear is over, right? Because it totally changes the business model. This is going to be a lot more profitable than their base vehicle business.
As Tesla navigates through its current challenges, it is crucial to look beyond the immediate turbulence to understand the company's long-term growth prospects. We think that Tesla's strategy, particularly with its new, more affordable model, is a calculated risk that could redefine the EV industry. The anticipation of Tesla's next-generation vehicle platform is a key factor in its future growth narrative. And this new model, aimed at being more affordable, is set to broaden Tesla's market reach. While it is true that the lower margins on this model contrast with Tesla's traditional high-margin offerings, this strategic move is not merely about immediate financial gains. Rather, it's about market expansion and long-term dominance. Tesla aims to make electric vehicles more accessible, thereby capturing a larger customer base. And this aligns with the company's mission to accelerate the world's transition to sustainable energy. For those who haven't realized it yet, Tesla's broader vision extends beyond just cars. The company's foray into AI, robotics, and self-driving technology presents additional avenues for growth. And while these segments are currently overshadowed by the automotive division, their potential impact on Tesla's long-term performance is substantial. And as these technologies mature, they could become significant contributors to Tesla's revenue and innovation footprint. In essence, Tesla's current strategic pivot may seem like a mere departure from its high-growth narrative, but it's much more. It's a necessary transition.
So you got some new research out. You lowered your price target on Tesla. You still have a buy, but you lowered the price target. New price target 234, it was 267. You still see a more than 20% upside in the stock. But I want to ask, why did you lower the price target?
Well, look, the quarter itself had some puts and takes. There was a small improvement in what we call pure auto gross margin, a slowdown in energy storage growth. But the real story was a lack of pinpoint guidance for 2024 unit sales. Like you said, the company talked about a slowdown in growth as it finds itself between growth waves. You know, and our note to clients was a call for patience. You know, we called it a time to bide time. Tech adoption curves are never smooth, Frank. You have slowdowns and accelerations in growth. And for some over the last 100+ years, you've even had a reduction in penetration during times of economic stress. And we're now in a slowdown period growth for Tesla.
Okay.
Look, it's not great, but we're not long-term bears. There are way too many good things going on, whether it's next-generation vehicles, full self-driving.
I mean, George, in all fairness, I think you're actually a long-term bull. You have 20% upside for the stock. She also pointed out gross auto margin, which beat expectations, but is still well down from a year ago. I do want to ask you, how did it beat expectations with Tesla cutting prices in China and cutting prices in Europe? Explain that for people out there who are Tesla investors, because that's such a key metric.
Sure, it's a really good question. It was a very marginal beat relative to expectations. And if you recall, over the last several quarters, we've seen margins come down quite a bit. So we've bottomed, it looks like, but it was a very small bounce. We actually think that in terms of upside catalysts, call it over the next 6 to 12 months, we may see a more material improvement in margins because we don't think the company is going to cut prices as much as they have over the last several quarters.
All right, two big questions. Again, your price target is 234. You see a 20% upside over the next year for this company. Before, the estimates were for 20% growth in vehicle sales. Tesla said it's going to be notably lower. Give us a ballpark figure where you think that's going to be. And what's going on with this next generation new platform vehicle? I mean, how optimistic or not optimistic are you about it? I'm hearing some people say it's supposed to compete with like a Honda Accord.
Yeah, totally. So we see vehicle sales this year in 2024 of 2.1 million versus 1.8 million in 2023. And with regard to the next generation platform, we think it could be a very, very big deal. It's the car that's going to get Tesla to its long-term goal of about 20 million units. And they just did 1.8, right? So that's a lot of growth going forward. And we think that's going to be the mass market vehicle that takes Tesla to the next level.
Tesla is setting the stage for a future where it not only leads in high-end electric vehicles, but also dominates the mass market. But only a few people understand this. To fully grasp the current investor sentiment towards Tesla, it's instructive to reflect on the company's past, particularly the tumultuous period of 2017-2018. This historical context provides valuable insights into how Tesla has evolved and how investors might interpret its current situation. During this period, Tesla faced significant challenges while scaling up production for the Model 3. The automaker struggled with a complex manufacturing process, which led to delays, quality issues, and missed production targets. These hurdles not only frustrated customers, but also strained investor confidence, evidenced by Tesla becoming one of the most shorted stocks in history. Fast forward to the present, and investors are in the same position as they were in the past, particularly as Tesla prepares for another ambitious production ramp-up for its new affordable model. The truth is that investor reactions are mixed. While some acknowledge Tesla's past successes and view the current phase as a temporary setback with long-term benefits, others are cautious, wary of a prolonged period of stagnation or decline in stock performance. So basically, we think Tesla's historical challenges serve as both a thing of caution and evidence of resilience in Tesla stock. Right now, investors are weighing the risks of the current scaling-up phase against the backdrop of Tesla's proven ability to overcome past obstacles and emerge stronger.
Like, what else do they want? I mean, about margins, like the strategy around the margins and price cuts, like it's there in the numbers. Like, isn't it, like they're cutting the prices because we've seen EV penetration is disappointed, number one. Number two, they got competition. They've got the best of production to be able to pump out volume. So if they drop prices, they're going to be more competitive. Like, what's the great mystery here? You know, these guys like really want to knock Elon, it seems like, for his public image, which is like, look, I get the reason to dislike the stock. It's the only downtrending like mega cap stock. It's getting pinched on margins. It's got a tough, kind of outlook here when the overall trend is disappointed a little bit for the sector. But like this idea that like, it's time to cut the price target down to 315 because he's not acting like an adult. It's like, I feel like they're letting their personal views kind of get in here. It just doesn't seem like the important thing to talk about.
Well, especially because everything you just said isn't Tesla specific. This is like a major shift in the EV industry. We're seeing way on Rivian, Lucid, NIO. I mean, this is like a broader trend right now.
Their margins are so much better than like Ford and GM. Like, it's not even close. So what do you do? Like, what do you complain about? If you don't like the guy's like public image, fine. But like,
I think that you buy into that when you buy Tesla shares. You buy into the idea that, I mean, Elon Musk, I will say, he's like tried and true, always been Elon Musk. So I don't know why we're surprised when he says or does things that maybe don't agree with the street. That's sort of like his stick.
It's the other thing too, when you're like a whole bull case is about it not being a car company. It's more than that, but like it is a car company and it's been downtrending for a year and a half now. That you're cut your price target because you don't like his tone on the conference call. Like, give me a break.
It sells on car headwinds, and then it wants to then trade. It's like all over the place.
If you're cutting the price target because of the chart or because of like the overall industry, which is like maybe the pie is thinner than they thought, or that because it's a car company in sort of an uncertain cyclical time, those would all be fine. But like, I don't know, this idea that they're cutting the price target because of his like tone on the call is
it's like love him or hate him, you're still obsessed with him though.
Yeah, that's what I think it is. I think they're just really obsessed with him.
So how should you invest in Tesla, and how should you trade Tesla stock? Let's talk about this. For investors and traders eyeing Tesla's stock, the current scenario presents a complex landscape requiring careful strategies. Long-term investors might see this as an opportune moment to accumulate shares, capitalizing on Tesla's potential growth in the post-ramp-up era. The car company's shift towards more affordable models and expansion in AI and robotics could be pivotal for future gains, making current prices attractive for those with a longer investment horizon. Traders, on the other hand, might adopt a more cautious approach, seeking confirmation of a trend reversal or stabilization before entering. Overall, Tesla stock's volatility, driven by mixed investor sentiment and uncertainty about short-term growth, could provide trading opportunities on both the bullish and bearish sides. However, note that in both cases, whether investing for the long haul or trading in the short term, a clear understanding of Tesla's business trajectory and market dynamics is essential for informed decision-making. And here's another thing to note. Tesla's journey is symbolic of a dynamic company at the forefront of technological innovation and market shifts. So while current challenges and uncertainties may cast shadows, they also open avenues for strategic investments and trading. Whether you admit it or not, Tesla's evolution, from its past hurdles to its future prospects in affordable electric vehicles and advanced technologies, continues to make it a focal point in the investment world, as well as an opportunity for long-term growth. But what are your thoughts, though? Let us know in the comments section. And don't forget to tell us what your valuation for Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.